Morning, guys. It's Wednesday, April 16th, 5:25 a.m. Central Time. Grain markets are mostly higher this morning. May corn futures up 2 cents at 4.83 1/4. May soybeans up 1/4 cent at 10.36 1/4. May Chicago wheat up 1 3/4 at 5.43 3/4. May Kansas City wheat up 1 1/4 at 5.54 1/4. May spring wheat up 2 cents at 6.03 1/4. We've got more talk regarding farm payments. Let's start there.
So on Tuesday, Ag Secretary Brooke Rollins said the Trump administration continues to evaluate providing financial aid to farmers that are being impacted by the ongoing trade war with China. The administration has been assessing the possibility of such payments since Trump took office and the introduction of his tariff policies. Rollins stated last week that the ultimate goal is to eliminate the need for payments. She explained that the tariffs are meant to realign the economy and generate long term prosperity for U.S. farmers and ranchers. The government provided $28 billion in aid for farmers impacted by the trade war with China during Trump's first term.
This has become a weekly story for us. They comment on it basically every single week. And at this point, they've talked about it so much that you think that it almost has to happen. Trump himself discussed this on Truth Social yesterday, and I will read this to you because I know a lot of you guys are listening and not watching. Our farmers are great, but because of their greatness, they are always put on the front line with our adversaries, such as China, whenever there is a trade negotiation or, in this case, a trade war. The same thing happened in my first term. China was brutal to our farmers. These patriots to hold on. I think that's a typo. And a great trade deal was made. I rewarded our farmers with a payment of $28 billion all through the China deal. It was a great transaction for the USA until crooked Joe Biden came in and didn't enforce it. China largely reneged on the deal, although they behaved during the Trump administration, only buying a portion of what they agreed to buy. They had zero respect for the crooked Biden administration, and who can blame them for that? Interestingly, they just reneged on the big Boeing deal, saying that they will not take possession of our fully committed to aircraft. The USA will protect our farmers is how he ended it. So there's some typos in here. You guys can fact check all of this if you want. I don't have the energy this morning, but Trump's talking about it and mentioning specific numbers. One thing that is of interest here is the statement about China not meeting the trade deal target. This is the best, this slide actually is the best data that I'm aware of from the Peterson Institute of International Economics. And they would indicate that of the target, China only hit 50% of the 58% of the target rather. And that's all goods and services. With regard to agriculture, I think they thought that they hit 77% of the 2-year target. In any case, this trade deal, as I understand it, and I'm no expert on trade deals, but the trade deal was very much flawed from the get-go because it was benchmarked in dollars. It was extremely difficult to track. They should have benchmarked it in bushels or metric tons or some sort of physical quantity rather than dollar amounts. It's just too tough to track given the fluctuation of prices. And we never really know, like when we make a sale, a flash sale, whatever, you don't know exactly what the pricing structure is. You just know that it was sold. So it's very difficult to track. But in any case, I mean, the theme here is that the administration continues to discuss farm payments and whether you like them or not. And I have differing and contrasting opinions, even in my own head. It's probably coming later this year, unless the soybean market decides to rally $2. I mean, that would be my guess.
President Trump is urging China to begin trade negotiations. According to Trump, the responsibility lies with Beijing to initiate talks and propose a deal, asserting that the U.S. will not make the first move. Last week, after China imposed a 125% tariff on U.S. goods, the Trump administration responded by raising tariffs on Chinese imports to 145%. Beijing, for its part, has stated that it remains unclear about Washington's demands to de-escalate the situation. Meanwhile, the administration is actively negotiating trade deals with several of our trading partners, and Trump is reviewing at least 15 trade proposals.
All right, I'm going to risk being accused of being either a liberal or a conservative here. In the comments, I get accused of being both almost on a daily basis, or at least a weekly basis. I can't help but wonder if Trump's getting a little bit nervous about this for this reason. And it's not because I don't care which side of the aisle you're on, guys. It's because of this. In the fourth quarter of 2024, 259 S&P 500 companies referenced tariffs or tariff impact during their earnings calls. A number of U.S. retailers have already announced price increases, Walmart, AutoZone, Best Buy, Target, Columbia Sportswear, ConAgra Brands, Volkswagen. There are also some retailers that are doing tariff surcharges where you're going to see like an extra charge on your receipt to the tune of, 10, 20%, whatever it's going to say tariff surcharge on your receipt. I think that if that happens and you get this spike in consumer goods, whatever it is, it's going to be a very bad look for the administration. It's going to be a very bad look for the Republican Party. And I can't help but wonder if maybe the administration is slightly concerned about that. Maybe they thought that China would make a deal or come to the table sooner than they have, and they haven't. I mean, they've done nothing except kind of come back over the top with tariffs. Not really any fresh news here this morning. So I would be curious to know just exactly what the conversations are within the White House. Am I crazy to think that they're concerned that this is going to be inflationary? I mean,
No, of course not.
it wouldn't be it wouldn't be a good look for the administration at all.
The National Oilseed Processors Association released March crush data on Tuesday. The U.S. soybean crush increased 9.4% compared to the prior month, with NOPA members processing 194.6 million bushels. Despite the monthly increase, the crush was down 0.9% from March of last year. The average daily processing pace fell to its lowest level since September at 6.3 million bushels per day. Additionally, the March crush fell short of the average trade estimate of 197.6 million bushels. End of month soybean oil stocks in March declined for the first time in 6 months to 1.5 billion pounds. Stocks were down 0.3% from the end of February and down a whopping 19.1% versus year ago stocks. Stocks also came in below the average trade estimate of 1.6 billion pounds.
The crush number was good. It was a little bit below expectations, very close to last year. You could make an argument that USDA is perhaps slightly too high with its estimate for current marketing year domestic soybean crush, but you're probably splitting hairs. The soybean oil stock situation is interesting. So just a year or two ago, we were kind of told that we're never going to export soybean oil ever again because we're going to use so much of it for biofuels here in the United States. And despite the low stocks, the stocks in soybean oil are historically low, we're still exporting a lot. And I think some of the commercials believe that there is risk in holding physical soybean oil for two reasons: the lack of biofuel policy and also the tariffs. If the wrong things happen, they could be caught holding the bag on this stuff, despite the fact that stocks are low. There's too much that's up in the air, I think. And that's why part of the reason why, domestic stocks are low is because we're exporting more than we probably should be. But there are some kind of oddball reasons for that.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium video with Pete Meyer?
You guys are busy. I get it. It's that time of year. But if you're busy, if you're driving a truck or tractor, whatever you're preparing, this is really great stuff to listen to while you're working. We did 36 minutes uncut with Pete Meyer yesterday. There's no commercials, no interruptions. This is the only commercial that we do is on the public free stuff. We talked about the planting pace, which Pete believes is extremely important and could have some impact on the acreage mix. We talked about pricing and marketing. We did a biofuel update, and I know the biofuel front has been kind of slow with regard to news, but Pete had some updates for us. We also talked about what's going on in the futures business. If you're interested in that, Pete is a futures industry veteran. I'm not really a veteran yet. Well, maybe I am. But in any case, he talked about his thoughts on the RJO StoneX deal and some of the consolidation that we're seeing in the business. You should give that deal a shot, guys. $50 a month. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. If you're out working today, you can sign up on your phone. It takes like 30 seconds to do. We do Apple Pay, Google Pay, Cash App, credit card. It takes like 30 seconds. Our emails and videos are super easy to access on your phone. It's just one click to play the videos. There's no login instructions or anything. You could be signed up and watching the videos within a few minutes. I'll forward you a copy of this morning's email if you sign up early enough this morning. Give that deal a shot today, guys.
COFCO is significantly expanding its workforce in Brazil. The Chinese state-owned company is hiring for a variety of positions, particularly in operations, sales, trading, and administration. This hiring drive comes as COFCO is building its largest global export terminal at Santos, Brazil's leading soybean port. The terminal is expected to be fully operational later this year and is projected to have a grain export capacity of 14 million metric tons. COFCO's continued investment in Brazil highlights the country's growing importance as a supplier of agricultural commodities to China, especially amid the ongoing US China trade war. COFCO's expansion stands in sharp contrast with the cost cutting measures and layoffs currently being implemented by agribusiness giants like ADM and Cargill.
China and Brazil furthering their relationship with regard to agricultural trade is nothing new. It started 20 years ago. I mean, early 2000s is when this relationship between Brazil and China got going. It was in 2009 that Brazil and China became larger trading partners. I think Brazil passed the United States with regard to agricultural trade to China in 2009. In 2023, Brazil's president visited China and they signed multiple agreements aimed at expanding trade and investment with a notable emphasis on ag products. It was only in 2022 that China began allowing the import of Brazilian corn. They had all sorts of restrictions and they kind of got rid of those. So this is just more of the same, I guess.
U.S. sorghum exports to China have dropped sharply due to the ongoing trade war. In January and February, exports fell by 95% compared to the same period last year. This steep decline, has led some farmers to cut back on sorghum plantings, while others, facing limited alternatives, are expanding acreage. Dry conditions have led some farmers to plant more drought resilient sorghum while hoping for an end to the trade war or financial aid from the Trump administration. According to the USDA, U.S. sorghum acreage is projected to rise by 4% this year, reaching its highest level since 2023. Meanwhile, sorghum exports are slated to decline by 58% versus last year, hitting their lowest point since the 2018-2019 season when Trump's first trade war disrupted the market.
Sorghum is a pretty small market in the United States, but I'm sure there's some people watching or listening who care about this. We planted 6.3 million acres of sorghum last year. The demand base looks like this, but it fluctuates a lot. So I pulled up 23-24 because it's like pre-trade war or whatever you want to call what we're in right now. Exports were 77% of all demand. Now, keep in mind, we only produced 344 million bushels of sorghum last year. We exported 100 last year. 2 years ago, we exported 239 million. It goes back and forth kind of with the ebbs and flows of China. If you're looking at the U.S. sorghum supply and demand situation, it's projected to be pretty bearish, almost 16% stocks to use ratio, which would be like the third highest of the last 25 years. And I think a lot of that has to do with lack of Chinese demand. Chinese demand's kind of always been one of the big drivers in that market, and it can be volatile. I don't know a damn thing about pricing or how it's priced. I know it's a little bit more regional, I think, than, say, corn or soybeans. But that's the story, kind of a bearish-looking situation.
We had another flash sale of corn on Tuesday. U.S. exporters sold 4 million bushels of corn to Portugal for delivery during the current marketing year. The sale is the second of its kind this week, following Monday's flash sale of 5 million bushels of corn to Japan for delivery during the current marketing year.
U.S. corn's pretty much the only game in town. Brazilian corn won't be available for export, that second crop, until midsummer. So this further emphasizes the case or the argument that USDA is still too low with its corn export projection, despite the fact that they increased it recently. What did cattle do yesterday?
They were higher. Live cattle saw gains ranging from 52 cents up to $1.10. Feeders were 75 cents to $2.10 higher. Box beef was slightly lower yesterday. Choice was down 20 cents at $335.43, and select was down 61 cents at $315.24.
Outside markets, the Dow's down 100 points. The S&P's down 44. Bonds are off just a little bit. U.S. dollar is lower, to call it sharply lower. Crude oil is up 53 cents in the May WTI at 61.86. Have a great day, guys. We'll be back on Thursday.